Hello, everybody. My name is Drew Dosick, and welcome to Trading the Close. Today, we had a lot of price action that was really fluctuating. We gapped up on the morning, traded higher for most of the day. Then the FOMC came through and slammed the markets down. Now, I'm going to get into the logic as to why that's happening because we didn't anticipate a rate cut this meeting. We were anticipating a rate cut in September. But things are starting to change, and I'll get into that here in a few moments. Now, for economic data later this week, tomorrow, we've got core PCE data, and then on Friday before the market opens, we've got our unemployment rates and our non-farm payroll rates. So be watching for both of those reports at 8:30 in the morning. First one, core PCE tomorrow, followed by the unemployment data on Friday at 8:30. Plus, we're in the heat of earnings season. Today, after the bell, we've got Meta, Microsoft, Hood, Carvana, Qualcomm, as well as Ford. And Thursday, tomorrow morning, we've got CVS, Roblox, MasterCard, as well as Kamiko. And then Thursday after hours, we've got Apple, Amazon, Coinbase, and Reddit. We're going to look at a couple of those charts. But first, let's get into the market summary and see what's going on today in the markets. You see here, we've got the Dow Jones down 0.35%, Nasdaq down 0.15%, S&P 500 now down 0.2%. U.S. oil had a nice pop today, up 1.75%. Gold is down 1.66%, and Bitcoin is falling ever so slightly at 0.81%. All right, so let's get into the S&P 500 heat map. And you can see here, NVIDIA still remaining strong, up 1.99%. Same with AVGO, up 1.59%. We got Apple declining, down 1.19%. Meta down 0.88%. Walmart down 0.81%. And MasterCard, as I said, they're going to be due for earnings coming up soon. And that is down 0.73% into earnings tomorrow morning. All right, so into the S&P 500 we go. Yesterday, we highlighted how we had an engulfing reversal candle here on the charts. Now I'll zoom in. Now this isn't the biggest of bearish candles, albeit though an engulfing reversal candle is bearish. This wasn't a mammoth big red candle on the chart. This was at least giving us some insight as to potentially more selling pressure going into the day. Now I said I was going to talk about the logic of why the price action sold off, and let's get into the 10-minute to really see how that happened. All right, so today we gapped up, as I said, and we're really moving higher on the charts. Then here's the FOMC, big sell off, and you see here we're rebounding nicely into the close. Now, why would we sell off? We already knew rates weren't going to be cut this meeting. And think about this logically, guys. Follow me on this. All right, so we know and we were anticipating potential rate cuts in September, but what's going on right now? Tariffs are being finalized. And also, of course, just like I've said, there's no FOMC meeting next month. So we're going to have to wait 2 months before we have another meeting. Now, Jerome Powell did say he was going to have more data come in. He wanted to wait before cutting rates. But what sort of data is going to come in over the next couple months when we have these tariffs finalizing? Inflation is likely to uptick. Now, some companies are going to absorb some of these tariff increases, but they're ultimately going to pass them down to the consumer. And so that means higher cost. And remember, rewind the clock, go back to during COVID when inflation was out of control. We were hiking rates. So how is Jerome Powell going to cut rates if inflation starts upticking into September? The likelihood of a rate cut in September is actually going down now on the Fed Watch tool. Thus, the market started selling. But as we see here, it's a decent recovery into the close. You got to give credit where it's due. And you see these last 2-minute candles are really pushing, or last two 10-minute candles are really pushing higher on the markets. But I still see more downside coming, especially with the potential tariffs hitting the markets, hitting the consumer, and inflation upticking. All right, if the S&P 500 does come down, this is the first major level of support to watch, 61.46 on the SPX. Next up, the QQQ. As you see here, we are really trading sideways today. We did close down here, gapped up, actually having a little up positive day, and that's all really just coming in the last two 10-minute candles. As you see, very similar to the spiders, we were looking, or the SPX, we were looking like we were about to break down, but caught support right here on this trend line. And if you recall, I was talking about this the other week, how price really was squeezed in between these two trend lines. And so it makes sense that support would be right here on this trend line initially. Watch support too down here. So we see selling into tomorrow right around 562.26. But the major level that I would anticipate either consolidation or a minor bounce is down here at 539.19. Next up, the SMH. Now the SMH did push higher as you see here today, but I was looking for an additional confirming signal with price action going up inside this parallel channel. Today, looks like we're going to clearly close out this daily topping tail, which is a bearish signal on the chart. Ultimately, that could spell some positive insight for the SMH. However, I want to see price close above this candle, which is at 296.73, to give me that confirmation to tell me that this trend line will then be support for any retraces down, keeping price in that parallel. We'll see if we get a close above this candle in the coming days. Today, not looking like it's going to happen. Into the IWM. The IWM, as you see here, did fall down pretty nicely today, down 0.54%. Caught support on this declining trend line. If I zoom back out and look at the weekly chart, and I'll go ahead and delete this trend line here too, you can notice this is all still just bullish consolidation at the time frame on the weekly chart of the IWM. So it's nothing really to be overly concerned about at this moment. We'll see where price action takes us in the coming days. If we do start testing this trend line even more, potentially breaking it. If so, 211.15 is going to be that area of support I will be watching on the IWM. Bitcoin, as we see here, Bitcoin still chopping around in this consolidation area. This cryptocurrency has truly been sticky, as a lot of other altcoins have been falling down on the charts. And you can see here with Polkadot has been falling down on the charts. XRP USD also has been falling down on the charts. Solana has also been falling down on the charts. Yet Bitcoin remains strong and is staying up here, all consolidating. Ultimately, I do see this eventually breaking down a little bit further, coming down, at least testing this inclining trend line right around the $113,641 mark. Next up, gold. Now see gold here with this beautiful sell-off today, coming down towards the bottom end of this wedge pattern on the charts. This area is support for gold in the near term. Be watching to see if we get a bounce tomorrow. If we don't, that would be a big negative sign there on gold having breached this area tomorrow. We'll see though with price action currently at support at 32.67. Next up, silver did sell also today. Beautiful sell down here on silver. Hasn't quite gotten to the first level of support. Now, one thing to remember, folks, first levels of support likely do get broken through unless there's extreme euphoria for any particular commodity in this case or stock. So the first level of support is the main test for the first attempt of support. However, I'm likely not buying there. I'm waiting for that second level of support. And if you see here on the chart, the second level of support is very close to this inclining trend line too, depending upon how price gets into that level. If I scroll back over the charts, you notice this 34.86 corresponds with this pivot high. And then if you go down a little bit further to 34.50, we've got even more support right here with this pivot. So basically this zone, 34.86 down here to the inclining trend line around 33.48 will be a great area of support on silver for another bounce up higher. Next up, US oil did pierce and trade above this declining trend line today. As I said yesterday, I wanted to see a move above this, plus a confirming move that would potentially negate this bear flag pattern. Ultimately, though, this price action from this high all the way down here to the low, this long two red candle stretch has not had a full retrace of it. This is all still in the bearish consolidation area. But if we do confirm above this trend line tomorrow, that will then slowly start shifting probabilities towards neutral to potentially upside bias. So we're right here at a big critical crossroads for oil as I see it on the charts. Next up, we've got Nat Gas. Nat Gas did break this bearish consolidation, now closing the day underneath this consolidation area. Whenever this does happen, we could have a reflex bounce right up. However, that's a bearish signal on the charts, especially with this closing down here at the end of the day. So be watching for potential further downside on Nat Gas. This is the first area of support, albeit very close here at $3.03. However, if we break that, I'm watching for $2.55 as the next significant level of support on Nat Gas. All right, into the dollar. We were talking about this yesterday, guys, the DXY on the daily time frame. Notice how we've had an inverse head and shoulders pattern that I highlighted, with this declining neckline being the trigger point for this move. Now, yesterday we closed above. Today we confirmed nicely above. And that was mainly on the back of the news from the FOMC. The dollar really just started ripping higher on the charts. Measured move for this inverse head and shoulders is up here at 101 and 41 cents. Now, keep in mind with the dollar, if it starts ripping higher, that certainly could be put pressure on Bitcoin, the stock markets, etc. Logically, think about it. If you have a dollar that is worth more, Bitcoin price likely is going to go down because of that. So we'll see what happens with the dollar once we reach this completed major move at 101.41. Next up, the 10-year yield also did start spiking up today with that news. A lot of people are starting to get nervous about this inflation. So this all kind of lines up with my thesis of what potentially is going on, why the markets hit the sell button this afternoon. We'll see if this 10-year yield continues pushing up. Major area I'm watching here is this declining trend line currently at 4.451% on the 10-year yield. Next up, Wingstop. Now, Wingstop reported earnings yesterday, folks. And as you can see here, fantastic bounce and recovery. For those that do know, I did have this in my small cap swing trading service. We got in yesterday at 285, and then we got out this morning pre-market over $350 with a gain of over 23% and holding this stock for less than 24 hours. Guys, I don't care what type of gains you have, and whatever you can get 23% overnight, guys, count me in. And really, you know how I found that? I found that because this is a sleeper hold setup. This is something I teach in my Mastering the Overnight Trade, the Sleeper Hold course. This trade, if you see right here, this whole pattern coming right down into support, this would lead to maybe not this big of a significant bounce, but an almost high probability. We're talking 80 to 90% bounce from this level because of the pattern that displays itself. Do yourself a favor, learn how to read charts so you can have insight like this when stocks are getting ready to bounce. Very easy, quick score for us and our members here at Verified Investing. Next up, FCX. Now, FCX, look at this chart plunge that we see today. Notice here on the 10-minute chart, price was just trading along fine for most of the day. Then all of a sudden, right here at 2 o'clock, news broke that we are going to start imposing a 50% universal tariff on copper. And that sent the price of FCX plunging down lower on the charts. If I zoom back here on the daily chart, you can see here we tagged the first area of support at $38.39. Notice also there's a gap fill right here, $38.48. But this area so far in the near term has provided support for a bounce up on FCX into the end of the day. I'll be watching over the coming days, though, these next couple levels of support should the selling pressure continue. 35.86 and 32.25 are those two levels. If I zoom back out on the chart too, you can see FCX has really been contained in two different trend lines outlined here on the chart. One back from May of 2024 and the other one all the way back here from the COVID lows. And so that would basically be the floor. If we break that level, this trend line on the downside, which is currently 29.59, watch out for FCX. It will be in some negative territory for quite a while. This is going to be a major contention zone should we see selling pressure on FCX continue with this new tariff rollout. And speaking of tariff rollout, look at this chart here on copper. Now, this is the cash contract for copper, the hard commodity. And as you see here, I've highlighted, we have a bull trap that's occurred right up here at the top end of this parallel channel. Notice and look how beautiful technical analysis is, folks. You can see here with this trend line moving up on the charts, we have this pivot to pivot. And where did price stop on the chart of copper? It stopped right up here at the top, basically pierced this area at $5.88. And that was all just because of simple trend line analysis. You could predict these things if you know how to draw on the right areas of the chart, just like here on this chart. And then plus what happened after price hit that trend line. It created a daily topping tail. So that's telling you a couple signals that price is likely going down in the near term. This is an awesome chart, clearly displaying how technical analysis can give you an edge and get you some profits in your portfolio as long as you know how to read the chart. So now price plunged significantly. This huge red candle, guys, is really going to be a sore on the thumb in this chart, basically damaging the patterns of what's going on. So this big red candle is likely to control price for the near to midterm. Watch this next level of support at 441, followed by 401. And then also notice the bottom end of this parallel channel is not that much lower on the charts, right at $3.82. So be watching those areas for copper to potentially bounce back up and retest this 50% area of the parallel channel right at $4.72. Next up, Apple. Now, Apple has earnings after the bell tomorrow, but notice the price action today, as well as the last few weeks, it's really kind of been trading in this range right here. Hasn't really made new highs, hasn't come down and made new lows. It's all been contained in this range. And so Apple, as you see, due for earnings tomorrow after the bell. What I'm going to be paying attention to now, granted, if these levels aren't breached in trading tomorrow, the first level of support is not far away at 205.65. You notice how there'll be some consolidation right here, and 202, basically 205 to 200 is going to be the first area of support on Apple. Should that break, this declining trend line down here, 192, will likely catch support. Notice how when price breaks out of a trend line, it usually likes to retrace to the trend line and then bounce up, much like a springboard effect that you would have at the swimming pool during the summertime. This is a great play, especially if price comes down here for Apple into 192.58 tomorrow. Next up, Amazon. Amazon also has earnings after the bell tomorrow. Notice how when price action was accelerating up, ran straight into resistance, poked above, and never confirmed, and since has started rolling back over. Now, there's going to be minor support on this inclining trend line right here. Granted, we did confirm up above this trend line, so be watching tomorrow around 228.16. If the earnings disappoint, we're going to be coming down here to 218.39 on the charts, followed by 205 in that 205 to 207.50 range. To the upside, we really don't have too much to go before we really jam into resistance, which also is another high pivot. Notice up here on this inclining trend line, we're going to have resistance at $240.89. Lastly, Coinbase. Now look at this, another bull trap on the charts, at least for the time being. Now, granted, it did confirm above, so this area did provide support for 2 days. Notice that when price came back down, pierced, bounced up. Then on this third day, it created a doji right on top of that trend line and then plunged down further, getting to the next level of support. As you see, that's strung out from this previous pivot high on the chart back in November of 2021. So where does this take us in Coinbase? Coinbase comes out on earnings tomorrow after the bell and disappoints. Price action will likely catch support right here in this zone, 329 to 340. They have another trend line level of support, and then this major technical level here at 329 will likely catch price onto the upside. You've got this trend line, and then you got the most recent highs here at 44.48. But with this news about potential inflation increasing over the next couple months, we're likely going to be headed down on this earnings report. Ultimately, earnings are a coin flip. So guys, it's better to react to the earnings, wait for the price level to get tagged, and then make your trade rather than jumping in pre-earnings report and really flipping a coin. Anyway, always got to stack the deck in your favor, especially when you know how to read the charts. That wraps up Trading the Close. Look forward to bringing you guys some more trading setups tomorrow. Until then, I'll see you guys on the charts. Take care.